You are listening to chartingwealth.com for Thursday, the 29th of September, 2016. The market was up 0.6% for the day. We still don't have a crossover going up on our MACD, so we're still confirmed down. As we look through the market, we see that the first day of the new 2-day candle is a green up candle. It's actually got a large wick on top and a large wick on the bottom, so it would be what we would call a spinning top, means indecision. The market can go either way. Now, which way is it going as far as the MACD and the derivative oscillator tell us? Well, we can see the derivative oscillator has been losing downward momentum, means it's tending to move up at this point, and we're getting closer to a crossover going up on the 2-day chart. Has not happened yet. It is interesting to note that the market on the 2-day chart did close just on the first day of this new candle. It closed above the weekly trend line. Now, it is not a confirmed candle until it closes, and it will not close since it's a 2-day candle until the end of the day on the 29th. Pay attention to that. Again, what's really been happening, there was a surge in the market starting on the 15th, going through the 23rd, and then the market took a decidedly downturn on that 2-day candle ending on the 27th. And we've really not even moved. We haven't even closed above where the movement started going down on the 27th. So it's really a sideways slide. Let's take a look at the 4-hour chart and see what we see. We can see that the market bottomed out around 4 p.m., the candle closing at 4 p.m. on the 26th, so the candle in the afternoon of the 26th, and opened up, started moving up since then. At the end of the day, it did cross over going up on Wednesday. There was a lot more up movement that was trimmed off. We have a large wick on top of the green open box candle. So we'll continue to watch and pay attention. We don't call anything at this point. We have a retracement underway, a pullback, and we'll just keep an eye on things and see what it looks like. All right, that is where we are on the total market. Now let's jump over back to our 2-day chart and take a look at the S&P 500. Again, the total market up 0.60%. The S&P 500 not up that much, up 0.15%. It did close above the 2-day trend line. Again, just for the first day of the 2-day candle, derivative oscillators losing energy. Haven't had a crossover going up yet on the MACD, so that is not confirmed. And again, don't forget our weekly chart is still in a down move. That has not changed. Now let's take a look at what happened intraday on the 4-hour chart. Like the total market, we can see that the market bottomed out there on the afternoon of the 26th and then started moving up on the 27th and 28th. The S&P 500 has been in a confirmed up move since it crossed over going up on this 4-hour chart back on the 20th of September. It has not had a confirmed down move yet. We were waiting to see if we would have a crossover somewhere after the pullback. That has not happened yet. But again, the market has not retraced from where it even started moving down on the morning of the 26th. That is Monday, the beginning of the week. It's still not retraced where it was moving down at that point. So continue to pay attention, watch, see what happens, pay attention to things in the news that we told you about in the weekly review and forecast. If you haven't heard that yet, you're waiting really late in the week to do it, but it's never too late. Go pay attention to that and make sure you mark it down every single week on your daily chart review. All right, now lastly, as far as our indexes go, we're going to go to the Qs, ranging back out to our 2-day chart. The Qs is, of course, the NASDAQ 100. If you will recall, it has been in a confirmed up move on the weekly chart for many weeks, and we had the MACD not yet crossover, although it's getting awfully darn close crossing over, moving up on the 2-day chart. That has not happened to this point. We are well above the Bollinger Band on this new candle as we were on the candle that closed out on the 23rd. So again, lots of up momentum. Don't yet, though, have a confirmed crossover going up yet on the Qs. If we look intraday on the 4-hour chart, what do we see? Well, we see, like those other charts, the bottom occurred on the 26th, and the market has been moving up since then, although we still don't have a crossover on the derivative oscillator, but we do have the MACD crossed over on the afternoon, moving up on the 4-hour chart, the afternoon of the 27th. So again, we'll continue to monitor and see just what we see. Were you able to take advantage of that up move that you saw beginning to take place? Again, continue to pay attention to it. Don't jump in just yet, even though you've got a whole bunch of upward movement. It has not yet been confirmed. You're going to want to see what happens in the charts on Thursday. Just because it looks like it's going to cross over going up does not mean that's going to occur. So that is where we are on all three of our indexes. And lastly, we're going to go to gold. Oh, and for the record, the NASDAQ 100 was up a puny 0.17%. Now remember, total market up 0.60%, and the S&P 500 up 0.50. What's gold up to? Gold was down 0.32%. Gold has been in a confirmed down move on the 2-day chart since the 8th of August. A lot of big down movement in gold, popped up for 2 2-day candles, down again starting on the 9th of September, popped up for 2 2-day candles on the 21st and the 23rd of September, then started moving down again, never crossed over all this time, going up on the MACD. Derivative oscillator did kick over going up on the 23rd of September, but the MACD, our big indicator, did not. So we're still in a confirmed down move on gold. Now let's check out what's going on the 4-hour chart. Were you paying attention? The 4-hour chart has been a very good trading chart for us, and of course it crossed over going down on the morning of the 28th. Were you able to find an in spot in an inverse gold fund to actually start writing gold down? It qualified for an entry point right there, as we have been talking about. So again, you got a couple of things going for you. You have the fact that the 4-hour chart has been working nicely for us, and you have the fact that gold is actually in a confirmed down move already. Those of you who jumped into gold back around the 13th or even the 9th did well in it on that down move. And again, we've got another possibility of gold actually continuing to move down once again. So pay attention. Thank you so much for being with us. We always love to hear from you. We do have Chapter 3 of the Charting Wealth book up for your review, talking about emotions. If you haven't already read Chapters 1 and 2, do that. You can find them at the Charting Wealth YouTube page. Plus, we also have those available for you at the website and on iTunes. Thank you so much. Please, if you want to help us out, go to iTunes, give us a 5-star rating, subscribe to the channel. Helps us with our metrics. You've made us as high as number 6 in the world in Stock Market Podcast, and we so appreciate that. Also, if you want to help us out, go to YouTube and subscribe to the Charting Wealth channel. We love to hear from you. Sign up for the newsletter. With that, you will get our How to Read a Stock Chart video. You'll get the layout that we use, and you'll get our daily worksheet. God bless. Take care. We love to hear from you at chartingwealth.com.